Hello, chart watchers, and welcome to this Thursday, June 6th, 2019 Market Watchers live show with your hosts, Tom Bowley and Erin Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a look at what's going on in the market today so far. We have the Dow Jones Industrial Average up 42 points, the S&P 500 up 2, the NASDAQ down 10 points, and the Russell 2000 down 15, significantly underperforming the S&P 500 once again. 10-year Treasury yield continues to drop and stay in that 2.08 to 2.10 range. Currently today, 2.09%, down 3 basis points. Volatility index continues to drift lower, which is a good sign overall for the market. I like to see that VIX down below that 16 level. We're sitting almost right on that level at this point. Energy finally getting a little bit of a bounce. You can see we bottomed a few days ago. We are back up today, leading the market to the upside. Unfortunately, consumer staples is leading, trying to make a breakout, materials leading, and healthcare leading. These are all non-aggressive areas of the market. So for the second day in a row, we are seeing leadership from the more defensive areas and also from energy and materials, which being bolstered somewhat by a rough week in the dollar. You can see personal products making a breakout here. This is one of the reasons why we're seeing leadership from consumer staples today. Meanwhile, truckers cannot catch a break. They just continue to drift lower. One of the worst performers today. You can see down almost 2% today. Leading in the energy space and also leading the Dow today is Chevron Corp. Chevron up 1.5%. And ExxonMobil also, I think, one of the top 2 or 3 performers in the Dow. Later today, we're going to be talking about Bitcoin and we're going to talk about gold. So I thought I'd throw both of those up here on the screen. You can see the past week, they're going in different directions. Bitcoin has been moving lower, down another 4% today. Meanwhile, we are seeing gold make a huge rally with the weakness in the dollar. So, Erin, I know you and I, we talk about gold all the time. We're going to have a really interesting discussion with Dave in just a little bit. But gold continuing to move higher here.
Absolutely. It's on its way up for sure. I'm looking at I mean, I can't believe we hit overhead resistance and we're just going to burst right through it today. It looks like can't say enough good stuff about gold. I'm sure Greg's out there with his cheerleader uniform on.
He was on here with his cheerleader uniform on the other day. I had to try and calm him down a little bit. Mm-hmm. But yeah, gold, and I've been I'm not going to say a perma bear because I do recognize those moves, those short-term moves in gold, but the long-term trend in the dollar has been higher. So I'm still nervous about gold longer term, but short term, I've got a number of indicators that it happens to agree with you right now. I think the dollar potentially could go down further. And if that happens, I think gold is going to have a real shot at that 1375 area, which has been overhead resistance for the last few years. But I do want to bring in Dave Keller. Dave, first of all, welcome to Market Watchers Live. How are you doing?
Doing well, Tom, Erin. Good to join you guys again.
Yeah, we're going to have a very interesting discussion later about Bitcoin and gold. So I don't want to, steal anyone's thunder too much here. But I do have a question for you, Dave, because the sectors, when I look at what happened yesterday, we saw almost all the defensive stocks leading the S&P 500 and the Dow. And today, I'm seeing a little bit of that as well, along with energy and materials. Does that make you nervous when we get a bounce? I know you're a relative strength guy. Does it make you nervous when you see the S&P 500 trying to recapture key moving averages and so forth, being led by a lot of these defensive stocks?
Absolutely. So it's a great question. And I think at a time like this, when the market has pulled back and then it's starting to bounce a little bit, it's all about the leadership and whether you have a rotation or whether who's really driving the thing higher. And yesterday I was watching the markets go higher, watching things strengthen. And then I looked at utilities being the number one sector. And that, and real estate up there as well. So those types of sectors leading on an update, it should not be comforting if you're bullish on the long term, because that's the sort of defensive panic sort of location you'd see people drift to if they're worried about further lows. So according to the flows and the sector flows, it certainly feels more defensive than the tape would actually appear.
Yeah, I agree with you. And 1 or 2 days doesn't make a trend. So obviously we want to.
That's right.
Continue to monitor. But if the S&P keeps moving higher, and especially down the road, if it tries to challenge all-time highs, and we're still looking at sectors like utilities and real estate driving the market, I think that could be a big problem.
Yep. And staples, another one that you mentioned in the intro. That's another one that if staples are doing that much better than discretionary, you have to be a little concerned.
No doubt. All right. Well, we are going to have a great show for everybody today. And Erin, why don't you take it away and tell everybody what we're going to be doing?
All right, sure thing. So you've got a workshop coming up on Tuesday. Wednesday, Tim Ord of the Ord Oracle. If you've read any of our Top Advisors Corner articles, he's in there often. And Thursday of next week, we have John Murphy, Titan of Technical Analysis. Greg Harmon is going to join us on our following Wednesday, June 19th. And Julius de Kempenaar is going to be back with us again on Thursday of next week, the week after that. All right, today's agenda, as Tom said, we're going to talk gold and Bitcoin a little bit later after our news and headlines. Bank of America is our first symbol, BAC. We have a special Talking Technically for you today, and we will finish off after that with the Scooter Report. So let's go ahead and take it away, Tom. Technical news and headlines.
All right. Well, we did have a couple economic reports out today. Of course, it's Thursday, so initial jobless claims were out. They did come in just slightly above expectations, 218,000 versus 215. Quarter one productivity matched expectations, but I really was looking at the quarter one unit labor costs, which came in way below expectations, minus 1.6%. I think the last time we had a reading, it was also in negative territory. And I don't know, Dave, Erin, if you all have any thoughts, but I'm seeing a lot of, when we look at wage inflation, it seems to be somewhat non-existent. When we look at the actual metals and so forth, because the dollar's been strong for so long, we're not really seeing inflation there. I think this is all going to put pressure on the Fed to lower rates. Would you agree or disagree, or do you have any thoughts?
Well, I have to say that I'll chime in first. I think that it will put pressure on them. I mean, we saw pressure being put on them last year. Everybody was like, oh, you really don't want to raise rates, so you don't want to do that. And things started to get a little shaky in the market. And so they opted to pull it back a little bit. So I wouldn't be surprised if we see them pull it back a little bit, just because we are seeing some weakness in the economy right now, just slightly, just a little under the hood there.
Yeah, and Dave, I don't know if you agree with me, but I always view the bond market as being much smarter than the stock market. And the bond market, we've been seeing those yields dropping. What's that telling you?
I think that's absolutely right. And, a couple things, rates going lower. And it's not just that people will be looking for rate cuts, but it's also, it's an expectation that's changed. So it's so funny that we've now transitioned to a point where people are, now almost banking on the fact that the Fed's going to take action, which I think is a very different mental state for the average investor than it was a year or two ago. But yeah, there's no doubt that, bonds have risen dramatically. When you showed the 10-year chart, the interest rate chart in the intro, it shocks me every time I see that chart to show how low yields have gone and how low they've remained. And charts like AG and other TLT and other bond ETFs have just continued to go vertical and then continue even further. So that shows you there's a real flight to safety and also an expectation that rates are going to come down. And I think that's what's buoying stocks a little bit in the short term is maybe a little expectation that that's going to happen sooner rather than later.
Yep. Great points, both of you. And I getting back to that December, Fed stance, they were still talking into the fourth quarter that they were going to raise rates 4 times in 2019. And the bond market, we were looking at yields dropping. And so finally the Fed came around and said, well, you know what? We kind of agree with you. Let's pass on all those rate hikes that we talked about. Maybe there'll be one in 2020. And now I think they're I think they're starting to react again to what the bond market's been saying. And now Powell the other day said, hey, I want to keep this bull market alive. Essentially, that was, might be paraphrasing here a little bit, but I do think that the Fed is going to continue to do what it needs to do to keep growth positive. Not seeing a great reaction so far, as we mentioned with the defensive sectors, but anyhow, so that's just something for everybody to think about. All right, let's move on to the earnings reports. We did have a few out last night and again this morning, but most of these reports were pretty good in terms of bottom lines. But it comes down to your guidance. And so the market is looking for maybe a slowdown in quarter two over the summer. And so even though many of these companies that I'm pointing out here and have pointed out throughout the past couple of months, for the most part, they're beating bottom line expectations, but it's more about what are you going to do? And so taking a look at some of these charts, I think it's kind of important to pay attention to what the market tells us in terms of relative strength and how they treat some of these companies. For instance, MongoDB, this is a smaller software stock, but software has been one of the sweet spots in the market for years, really, throughout much of the bull market. And you can see that this relative strength continues. Even in the fourth quarter of last year, when the market went down, yes, we saw software go down, but on a relative basis, it continued moving higher. Same thing in May. Yes, software got hit with the overall market, but look at, throughout the month, it was putting in new relative highs. So when you're in a group that is strong relative to the overall market, and you happen to be one of the better stocks, I would be looking for a good report. And when I looked at MDB, they came out, they beat their top line, they beat their bottom line, and they guided mostly higher. The stock sold off a little bit earlier today, but buyers come right back in. And I think that's a really important concept if you're trading stocks, to make sure that you are in an area that the market likes and that you also own a stock that the market is favoring at that time. So I think MDB is a perfect illustration of that. Now I'm going to give you a smaller stock that was really the polar opposite. This is Cloudera, also in the software space. So this software boat isn't being lifted by a rising tide. Not all software boats are being lifted. You can see CLDR topped back in October. When we look at relative strength, it also topped back in October. Look what Cloudera has been doing relative to its peers. So while we had MongoDB moving higher and being favored among the software stocks, we had CLDR being tossed out by Wall Street. So what happens? The stock today is down 41% when they come out with their earnings. They missed on their top line. They actually did beat on their bottom line. Unfortunately, they guided lower, and then their CEO retired. But you don't know this news if you're just simply waiting on the fundamentals to hit you. You know it when you're watching the relative strength, though, because these Wall Street firms, they go out, they contact management, they get a sense of what's going on, go back to their office, and then they're buying and selling for clients. So in essence, you're basically getting the fundamentals handed to you by following these charts, especially the relative charts. Sometimes it can be a little unclear if you're just watching a chart, because maybe the chart doesn't break down, but the overall group is doing very well and it's not following suit. And that can be a little bit of a warning sign. So definitely at least keep relative strength as part of your repertoire when you're analyzing your stocks and deciding how you want to invest your portfolio. A couple of things I wanted to mention also. I don't know if you noticed, but overnight, China, and this chart doesn't show it, but China closed at 28.27 on the Shanghai, which is a new low, the lowest close that we've seen since back in February. So, the S&P 500, and I know there was a lot of talk earlier this year about China being one of the best areas in the market. I think it was more of just a bounce, a temporary bounce. I think that this China-U.S. trade war, the longer it lingers on, I think the more impact it's going to have on China, certainly more than us. And I think if we go back and look at, longer term, and we could go throughout the bull market, but China, topped back in 2015. You can see where we are now. We're about half of where we were 3 or 4 years ago. So there's no question who the market believes is the winner here. One last chart, and then I'm going to have Erin take over with the upgrades, downgrades. But I just wanted to show you this chart on the personal products area because it is making a breakout. This is in the consumer staples area. We always talk about there's always a bull market somewhere. Even in consumer staples, which is defensive, maybe lags on a relative basis for the most part. This is a nice breakout on the group. So we are seeing some leadership here today. So Erin, upgrades, downgrades, what you got for everybody today?
All right, let's get right to it. Okay, so let's go ahead and just start with AMD. AMD was upgraded today by Morgan Stanley from an underweight to an equal weight. They have moved their target from $17, which of course is right here, and then it's been moved up to $28, so right about here. So clearly we're already above that, but they're going into an equal weight or neutral position, so they must be expecting it to turn back at that overhead resistance right over here. So let's go ahead and I'll mark that up for you. and we could use a horizontal line. I'm going to show you a little bit how to use this tool as we're going along. So there's the new support level that we've just put in over that broke out above that short-term top. And now we've got overhead resistance coming up at about 34.50. So that's where I would be looking. Notice with the PMO, and I'm going to bring this up a little more closely for you. One of the things I do like about ACP is I can kind of throw away the OBV a little bit and concentrate. So right here is where we got the buy signal on, here we go, let's pull that down right there. So you can see we were already looking for that move as far as the PMO is concerned, then that breakout move earlier. So I think the PMO was pretty good in letting us know more about AMD and the fact that we might want to expect a breakout. I like to see the breakout. I would hope we could get a little bit of a pullback to that breakout area, which is something you can expect a lot of the time. But if the interest starts to really move into this space, then I don't know. Well, we will see. That breakout does look very encouraging, though.
Hey, Erin.
All right. Yes.
Yeah, I was just going to add, too, I think AMD is another perfect example of relative strength because semiconductors for the past 5 to 6 weeks have been getting crushed. And this is something we've talked about on the show here, the fact that AMD was performing so well on a relative basis. And now we're starting to see why. We're getting upgrades. I think they're going to have some good results when their next quarter comes out.
Absolutely. Look at how it came down to the support area at that low back here from November. And it came right down there and it bounced straight up. But now we're looking at some overhead resistance. And I would say that it's locked in to these lows here, but also notice it comes in to the gap right in there as well. We've just about covered that gap. I would still look for the breakout. I mean, the PMO looks pretty fantastic right now. It's just now giving us a buy signal. And you saw how that buy signal worked out for AMD. All right, United Airlines was upgraded today from a neutral to a buy by Goldman. Their new target is 108. So let's go ahead and look at this a little more closely. I'm going to take it out a little further for us and move down. So 108, and you can tell right over here, I love this about ACP. So you can go all the way up here. 108 is clearly much higher than the high that we've seen previously. They're looking for it to really perform. Of course, obviously, they're giving it a buy signal, but they are moving the target up to 108 for United Airlines. Look at the PMO. We've got rising bottoms, and we have pretty much even bottoms here on the price, but rising bottoms, and then we're getting ready to get that buy signal. So United Continental's looking pretty good right now on the upgrade. Valero, and I have to say this I don't want to give them too much advertisement, but I have to say the Valero station here is definitely the best price. We actually had we counted a 35-cent difference between the price and a gallon from the Shell on the other side of the freeway. Seriously, 2 blocks away, Valero was 40 cents cheaper a gallon. So I'm liking them right now, but what about their chart? I'm going to go ahead and get us a trend line here. Here's that rising bottoms over here, right there. And then you can see the PMO is just now starting to turn up. I like this rising trend that we're getting ready to see. I would say the next area of overhead resistance would be at these short-term lows right here, right about at 77.86. So that's where I would look for the first possible turn back. But on the upgrade, I think Valero looks pretty good. Energy's been pretty beaten down, but you can see Valero's really hung in there. And of course, it's been hit especially hard in April and into May. But you know, it looks like energy wants to come back to life. All right, real quick here now, let's go to Cloudera. And I have to tell you, this one they had, I think you mentioned it in earnings. I'm not sure, Tom, but terrible earnings, CEO leaving. And now we have downgrades, 3 of them from Needham, Citigroup, and Stifel. And they have moved, all 3 of them, though, moved into the neutral position. Yet, their targets are down to $6 and $7.50. So right now, of course, we are below that. We're just at 514, as you can see. So now I would start to look for a possible bottom here. But look at the PMO. It's just, you know, in decline. And if we take this out to a longer term chart, I mean, we're hitting all-time lows For Cloudera, by quite a bit. Finally, I'll finish off with FCell, Fuel Cell. This one was downgraded by two agencies today as well, Oppenheimer and Cowen, both downgraded. Oppenheimer went from outperform to perform, and Cowen outperformed to market perform. So they're moving into a neutral position. I'm going to get that OBV back up here so we can see it a little better. Get that here. There it is. All right, so look at the volume here, and you can see, even if we just, let's bring this up a little closer here so we can see the volume pattern. Look at the negative volume coming in, high volume. The OBV is now setting lower lows, not looking too good for fuel cell. Cowen actually set a new target of $1. So they're looking at that level right there as possible overhead resistance, possible trading range maybe. There's a gap in here you can see. So I would start looking maybe for this trading range, but we still have to find a low on fuel cell, and we don't have that yet. And that's all I have for upgrades and downgrades. Here is the slide to let you know what I just covered, and I will have this up in the Market Watchers Live list recap after the show this evening. All right, time to move along and have our big discussion here about Bitcoin and gold. So,
yeah, first of all, I want to thank you both because this is kind of a historic first here at StockCharts, at least on Market Watchers Live. So we're going to talk a little bit here about gold and Bitcoin. And Dave has volunteered / been coerced to join us here and talk a little bit about Bitcoin. So I think what I'm going to do first is I am going to start with you, Dave, and I want to talk a little Bitcoin. This is something that admittedly I don't have a whole lot of experience with. I've never traded Bitcoin. And so I am going to sit back and hopefully learn some things as you go through and talk a little bit about Bitcoin. But it's a lot different than the things that we normally trade. I mean, if you're buying real estate, you have property. If you're buying the dollar, you can physically hold it in your hand. If you're getting gold, you can get the bullion. There's so many things that when you invest, you have something to hold. With Bitcoin, I don't know. What do you think here? Is it worth it? I mean, would you buy it?
So that's the real question. And I think the way that you responded to it, I think it mirrors what a lot of other investors, traders sort of experience. It's totally new. It's uncharted territory with most asset classes, with equities, with, even the dollar, with currencies, with interest rates. You have real experience over your lifetimes with these different assets and you understand them. Bitcoin is just new and it's trading like a new asset. It's understood like a new asset, which means it's relatively not understood. And so I think that's where there's opportunity, to be honest with you, for someone who watches the charts. I think that's where the opportunity is because there's so little data, so little experience most people have. So it is a right battleground for technical analysis to be understanding what's driving these short-term movements in the price of Bitcoin, to be honest with you.
Yeah, I think I'd almost say it's somewhat akin to, say, cheerleaders. I mean, you basically have your fanatics, right? I mean, those who really support it, believe it's going to the moon, and then others that sit back and say, where this thing can't go any higher, it's got no value. So what do you do? How do you mirror that?
So in your intro, when you were talking about gold, it was fantastic. You basically shared that, you said, I'm a bear on gold, but I respect the short-term movements. And I think it's a very polarizing thing, both Bitcoin and gold. It's one ways that they're similar, right? I've never met someone who's kind of wishy-washy on gold. You're either a gold bull or a gold bear, or if you don't explicitly say that, that's how you tend to approach it. And I think with Bitcoin, it's the same thing. People either think it's going to go to 1 million or people think it's going to go to 0. And there's very little in between that thinks it's kind of an okay asset. So the fact that there are fierce advocates, cheerleaders that swear by the long-term strength of those assets, I think is one of the things that makes gold and Bitcoin so similar and so compelling. It's such a polarizing asset. And for every person that thinks it's going to go to the moon, there's someone who thinks it's going to expire worthless at some point in the future.
Yeah. Now, one of the things I think that maybe is, could be construed as a positive for Bitcoin is that it really doesn't involve any of the central banks. And so maybe those who don't trust those central bankers, view this as a separate currency that won't be manipulated. What do you think about that?
I think that's exactly right. And just how we talk about a flight to safety and people going to fixed income instruments or real estate or something like that, same sort of thing. People that mistrust the ability of central banks to, manage their currency differential and, the whole idea of a fiat currency, which is the fact that currencies are free floating against one another. If people don't trust the ability, and there's a lot of skepticism that has grown over the years, especially with younger investors, trusting the system and trusting the stability of it. Something like gold or Bitcoin, if you're buying that, it's really a vote against the ability of central banks to operate effectively, operate efficiently, and do what's right for the overall global economy. And Bitcoin and gold basically is a vote that there are other ways, there are other sources of value, stores of value that make a lot of sense. So I think that's really important to remember that it is seen as an alternative to something like the dollar, something like the euro, something like Bitcoin. It's an alternative form of currency, of exchanging value.
Yeah, it makes sense. One final point. We're going to get in and look at some charts because I want to get your thoughts on what you think of Bitcoin. But one more comment, and that is, when I look at just about anything in the market, I'm always looking for correlations. I'm looking for, okay, this went up because this went down. This went up because this went up. With Bitcoin, are you aware of anything that correlates with the price of Bitcoin?
So that's a really good question. And to be honest with you, very little. I think what's so interesting about Bitcoin is that, as a technical analyst, as a behavioral finance aficionado, and those who, for the listeners who are clearly interested in charts, Bitcoin represents a petri dish of behavioral biases because there's no real source of value besides what people think about the opportunity or the negative opportunity for Bitcoin. So as a result, it ends up being much more volatile. It represents swings in euphoria and negative outlooks that are based on just people's expectations. And as a result, it has a very low correlation to other assets. If you look at the correlation of Bitcoin to the dollar, it sort of hovers around zero, but fluctuates positive and negative, but never really gets to a statistically significant level. It's sort of uncorrelated. And so as a result, I think that's one of the things that is a potential benefit of Bitcoin, and also arguably for gold, is that, it's a little less connected, little uncorrelated return profile versus other assets. It's funny when you look at the chart of Bitcoin, and again, for those of us that, and again, the viewers that are used to looking at Tom and Erin, your charts that are fantastic and represent this great market history, the chart of Bitcoin doesn't really look like anything else. And I think that's what's so interesting, what's so compelling about it. Here we're looking at the last 2 years of Bitcoin. And if you look at this profile of this spike into year end of 2018, this big sell-off, the rally and sort of all the movement in between. Other things look kind of similar to like that in different periods, but it has a very unique return profile versus other assets. The only thing that I would correlate this to, and it gets to how you actually look at the price of Bitcoin. I'm often asked how do you really understand Bitcoin and where it's come from? And I think there's two main ways you can do it easily on StockCharts. One is looking at the Bitcoin index. That's the chart we're looking at here, and it's $NYXBT. This is an NYSE Bitcoin index. It only updates at the end of every day, but it'll show you the long-term history, which is really only going back, 3, 4, 5 years, or to be honest with you. But looking at the last 2 years, you can really understand how this has fluctuated from a period of accumulation, sort of a bullish phase, to a period of distribution, more of a bearish profile, to return to a more of an accumulation phase. And the way that I would classify those phases are looking at the RSI indicator, which is that next panel down. So you can see as Bitcoin prices really extrapolated, went higher so quickly at the end of 2017, you can see how the RSI remained in that bullish category, never really getting below 40, really getting above 70 consistently. That's what happens when a market's in an extended bullish period. You can see how that totally changed in calendar year 2018 when the entire RSI goes lower, and you see the RSI being consistently oversold, very rarely gets above 60. It did it one time over the summer, but then reversed very quickly to go to new lows. And as a result, the returns relative to the S&P were dramatically exaggerated. So you had a period of outperformance going up 3, 4, 500%. This is when the price of Bitcoin went up, 10,000, 15,000 en route to 20,000. And then as it sold off and as stocks held up much better, you can see that the relative returns were dramatically lower. So this is one way you can look at it, is looking at the history of the NYXBT. The other thing you can look at is GBTC, which is a trust that tracks pretty closely the returns of Bitcoin. And here I'm showing the correlation of the Bitcoin closing price to the closing price of that GBTC, the Bitcoin trust. And you can see that overall it hovers pretty strongly positively correlated. There are times when that correlation becomes disconnected, and that's just when the movement in Bitcoin is so severe that it disconnects the two of them from one another. But you can see it catches right back up. And overall, it's a good lever to pull if you want exposure to Bitcoin prices. But that's sort of where I would look at the long-term profile.
Great comments. Actually, if you can bring that chart back down, show that. I want to see where Bitcoin's been rising here in 2019. I want to ask Erin, looking at this chart, Erin, you and I, we've talked a lot about bubbles on Market Watchers Live. And so when you look at, it's always easy to call a bubble after the fact. We saw what happened in 2017, the huge move up in Bitcoin, and then throughout 2018 just collapsed. Do you look at 2019, Erin, and do you see anything similar at this point to what we saw in 2017? Do you think this is a bubble, or?
Honestly, I think you can recognize them when you're in, because that's when the excitement and everything starts to just build. I mean, honestly, right now in TLT, I believe the 30-year bond, it's going crazy right now. People are just getting in it, and the excitement starts to build, and then you start to see that parabolic going. I'm seeing the parabolic right now coming into, I was looking at the GBTC chart, and there's definitely, when you look at that chart, you can see the parabolic that's in motion right now in the shorter term. And what you need to consider if you are in these, the Bitcoin versus gold. I mean, gold, we're taking off right now. And if you look at a monthly chart, if you really stretch it out on gold, we had that period where it was almost parabolic, not really a parabolic, but we were talking before the show. Remember when getting to 1,000 for gold was just such a big deal, and we just shot right up there. But eventually, you do look for that fall into a basing pattern. We never really had that with gold. It just continued higher. But we've been in a really long-term trading range now for a couple of years on gold.
I want to bring up one chart here before we move on to gold. And this is still dealing with Bitcoin. And, I think both of you can chime in. But Dave, first, I'd like to get your thoughts on this. And we talked a little bit about this before the show. But here is a chart going back the last few years with Bitcoin. You can see Bitcoin rising, falling, and now Bitcoin rising again. And if you remember the hysteria back at the end of 2017, when Bitcoin was rising like it was, anything related to Bitcoin, blockchain, this next chart here is Riot Blockchain. You can see the huge move. And we were kind of joking about Long Island iced tea. They changed their name to Long Island or Long Blockchain. And this was when the stock tripled, just because they changed their name. And that is the type of stuff that you look at and you say, oh my gosh, this is a bubble. This is crazy. Now, when I'm looking at what's going on here in 2019, and I don't know if you have any comments, but I'm seeing Bitcoin going up, but we're not getting the same fascination with Riot Blockchain. Of course, no pop at all here in Long Blockchain. So do you think this is telling us something different this time about Bitcoin?
Well, it's a really good point. I think that the two charts that you're showing at the bottom, Tom, are fantastic examples. Future textbooks on bubble theories will review this as the late 2017 as an example of what happens when, a company literally just changes its name and announces a rotation from iced tea to blockchain, and the stock just spikes as a result of that. But you can see how that euphoria completely settled down, and now it's really disconnected. It's sort of beyond the point. I think at this point, when you think about Bitcoin, at the end of 2017, it was all about the euphoria. This is when Bitcoin it felt like it was going straight up, right? It was continuing higher through 10,000, through 15,000, up to 20,000. People were speculating it would go to 100,000, a million. There would be no stop to it. And as a result, these companies got caught up into that into that movement. But you don't see that necessarily now, because I don't want to say that Bitcoin or blockchain has matured, but it's definitely evolved, right? So this rally is more, people now are starting to understand a little bit about what blockchain is, and are now starting to see more of the long-term potential. So I think the motivation for this rally in blockchain and in Bitcoin and other cryptocurrencies is less a euphoric bubble sort of experience. It could be arguably more of, understanding how this has long-term potential for the economy. And when you think about where to get exposure to blockchain, it's very different from something like cannabis now, right? When you think about exposure to cannabis, you have Canadian names that you can get exposure to. In the US, we're potentially getting ETFs that allow us to get exposure to those, but still very limited. Whereas in blockchain, there really isn't a great equity bet that'll give you direct exposure to blockchain. It tends to be more companies that are making blockchain or Bitcoin bets on their own. So it's things like things that are companies that are doing blockchain projects like a Microsoft or an IBM, something like payment processors like Visa or MasterCard, or maybe companies that are going to gain exposure based on the mining of Bitcoin, which would be something like NVIDIA or AMD. But none of those are pure bets on blockchain. It's more betting that companies like that are going to build up systems and functions and projects that are going to benefit on the long term, or going to grow on the long term upside of blockchain. So at this point, I think you're going to see less smaller individual stories that are related to the rise in blockchain. It's going to be more established players that are starting to recognize that there's long-term potential there.
Yeah, and I know we talked before the show too. I think Riot at this point, Riot Blockchain has a market cap of about $42 million. If it was such a great deal, I think you would see some of these big companies jumping in and and buying a company like Riot. They're not doing it. I think that tells us something too. Erin, before we go on to gold, did you have any comments on this chart? What do you think?
Well, I mean, I think that we still have to be careful with the volatility of Bitcoin. Yeah, I think people are starting to understand it a little bit more. But I was just looking at a chart, and since end of May, it went from a high, it traded anyway, at like 12.50, and it's down, it fell to $9 in a couple of weeks. We had like over 25% drop in it. So you have to really think about it when you're looking at gold versus Bitcoin. I mean, obviously, they're just on a completely different level. You've got the youth out there, I think, that really started to grab onto the Bitcoin phenomena, whereas gold is still your father's trading vehicle sort of thing.
Yeah, I think, too, your point is well taken, because if you've got funds for your child to go to college in some years, I don't think I would put it in Bitcoin. Because you might be going from Stanford to a community college.
Right.
It is worth noting, guys, that the chart of Bitcoin in any form, it's easy to not realize how extreme the volatility is. So, this chart of GBTC looks relatively normal. It's going up, it's going down. But if you think about the price movements, as you mentioned, Aaron, these are extremely volatile markets, and the daily movements, they will go 5-6% in a day, and that's a light movement day. I mean, it can go extreme from there. So I think there's a volatility at play that investors in general are unprepared for, and so it's very much uncharted territory for a lot of people.
Yeah, and I think that's a really good maybe segue into talking about gold, because we were talking about all the volatility associated with Bitcoin. And Erin, we talk about gold on the show quite a bit. We don't talk much about Bitcoin, but we do talk about gold. And even though it does have its moments, you can see here on this chart that we've had a huge week, and there's certainly volatility. It is nothing like we have seen with Bitcoin over the past few years. Would you agree with that?
Well, like I said, a 25% drop from the end of May until trading right now on Bitcoin. Yeah, it's a little different. I mean, you're looking at gold as, your hedge. You're looking at it as that sort of solid, back of the portfolio type of investment, whereas Bitcoin is sort of your risk on time to, look for these big moves. Personally, that the risk, if you're managing your risk, they're obviously two completely different trading vehicles.
Yeah, and I think too, when you're looking at gold, I think the familiarity of it among investors, with Bitcoin being so new, not really knowing what you're investing in, I think everybody has a pretty good handle on what they're doing with gold. I think most people know that it's being used mostly as a hedge, but trading it, you can get in and out and not worry about these 1 week moves. I think I looked earlier and Bitcoin was down 14% in the last week. And you kind of alluded to that, Erin. I've got a monthly chart here of gold. And when you look back over the last 3 or 4 years, we've been in about a $200 per ounce range on the price of gold, which is completely different than what we have seen in Bitcoin, which we've had a bubble, a collapse, and maybe another bubble building. Who knows? So I think your point's very well taken. But the familiarity of gold, I think, also enables more investors to feel comfortable buying and selling gold. Would you?
Sure. I mean, you actually have a correlation with the dollar, on gold. You can actually look at, you can follow the correlation and it'll tell you whether they're really tied or not. They generally are tied in a reverse fashion. So if dollar's going up, then typically that's going to, of course, put pressure on gold. And so you're going to get that movement. Whereas with Bitcoin, as you were saying, Dave, we don't have anything really to base it on like we do with gold and the dollar. So I think that's also one of the, certainly a benefit and a big difference between gold and Bitcoin.
Yeah, and I think the appeal here of gold and Bitcoin, I think the appeal for different traders is going to be quite different. Somebody who's conservative is likely to turn to gold for, a hedge, whereas somebody who's very aggressive probably doesn't want to deal at all with the gold and the fact that it's not been moving much and so forth. Whereas Bitcoin is much sexier, like we were talking about before the show, Erin. I mean, if you want to make 50% in 3 weeks and you had to choose between these two, Bitcoin's got a chance to do that. Gold is not.
Right. I think the discussion of it kind of Bitcoin and cannabis in a way, there's a lot of, again, it's a lot of this excitement, people just jumping on board. Because it's new. It's not as new now. So I think we will start to see a little bit of the volatility move down a bit. But like I said, I mean, when I measured that on GBTC, that over 25% decline, I'm glad I didn't, that's just not what I'm interested in. I don't like to play with that kind of risk.
Well, I want to get your thoughts, Erin, on the gold chart. And I know you have your DP charts that you like to use. So why don't you pull those up? But I wanted to maybe ask both of you, because we do have a poll running. And we're going to bring that up in probably about 5 or 10 minutes, which is, do you trade Bitcoin? Do you trade gold? Do you trade both? Do you trade neither? So my question to both of you right now is, do you all trade Bitcoin and gold? And or maybe even looking out further, will you consider trading if you don't already?
Right. Well, I know for me, I use the ETFs. I don't actually own physical gold, but I do trade gold, silver, precious metals ETFs now and then. But I usually do have some sort of metal like I said, in the back of the portfolio, just for times exactly like these. Gold is really taking off, but a lot of the other parts of my portfolio are just not going as strong because of the way the market is. So here's my chart of the Bitcoin, just to show you that really quick first. There's the drop. I mean, we're talking end of May from $12.50 to $9. I mean, that's right now, of course, you've got the PMO sell signal going on Bitcoin. But let me look at my gold chart, because I think that's...
While you're pulling it up, Erin, Dave, any thoughts on trading Bitcoin, gold? Do you trade them both? Neither? What?
Really good question. So I don't trade physical gold. The GLD I use in retirement accounts and have done on my own in personal accounts. And my concern was something like gold. Coming from an institutional investor background, the challenge is most institutional investors would not hold gold, only because it's hard to justify to clients why you're putting them in something super ultra conservative like that. So there's never probably going to be a huge institutional flow into gold or gold stocks, because it's just hard to justify. Now, Bitcoin, on the other hand, this is something you could argue that would potentially evolve. A place like Fidelity actually lists your Bitcoin holdings along with all your other accounts now on your website, which is sort of a vote for long-term success of that as an asset class. Having said that, I've not traded actual Bitcoin. I've not opened a Bitcoin account. I have traded the GBTC, and I was sharing, Tom and Erin, with you before we started. I've had one experience so far trading GBTC, and that was late 2017 as the market went vertical. I participated for a little bit. I sold out of it. and was so scarred by that. It was a winning trade, which was good, but I was so scarred by the volatility that I experienced over that 2 to 3 week period that I was like, that was it. I think I'm good for now. So I think the challenge for something like Bitcoin is, as you guys have hinted at, until you get institutions that would participate who are, arguably more longer term investors, you're going to have that instability and insecurity of heavy volatility. And until that settles down and people feel more comfortable allocating to something like Bitcoin or other sort of cryptocurrencies, I think it's still uncharted waters for a lot of investors.
Well, I will say that as far as your scars go, I do have a trading therapist if you need one.
I might ask you.
I don't know. I'm pretty busy right now, Tom.
Good point. All right, Erin, what are you seeing on the gold chart?
All right. Well, this is the daily chart. And, originally we were looking at a head and shoulders, which is, of course, is a bearish pattern. And when that just didn't execute over here and it just started to kind of travel a little bit, I started to notice a declining wedge. And so I started getting bullish on gold really back here. When the wedge was appearing, when we had the buy signal on the PMO, of course, we had that pullback. We got a fake out breakout. It didn't actually happen. But now, of course, it is pretty much moving in the right direction. This, of course, is dollar gold, so we don't see any trading, obviously, today, the intraday. But you can see we went right up on overhead resistance in the period of about a week. So we're talking about Bitcoin being volatile. I guess this is a pretty impressive move right now by gold. But I also think it's important to look at a few long-term charts here. Mm-hmm. So I'm just going to pull that up real quick.
Yeah, and just a reminder.
Feel free to chime in.
Well, I was just going to say, as a reminder, for those of you maybe who are new to Market Watchers Live, Erin does a sentiment segment every Monday afternoon at the very end of the show, and talks about gold, and especially talks about the discount premium, which is a great sentiment signal for gold. So just wanted to make sure everyone was aware of that.
Yes, exactly. Another reason why I'm familiar with gold and like it. And you can see we've had very bearish sentiment because the discounts have been very high, but also you can notice that it can persist. You can have those discounts last for a while, but I think it does give you an attention flag to keep an eye out on, like the PMO. And when it starts to turn up, you can start thinking about, the bullish possibilities. But here's that long-term trading range we were talking about that we've been in for quite some time. But I'm looking at on the long-term chart, and I just happened to look at this today and see what could be an ascending triangle on the weekly chart, which would tell us to look for that breakout above that 1370 area. And I certainly think that that's possible. I have flag formation here. If you'd asked me this a couple of weeks ago, I probably wouldn't been quite as rah on it. But I think we can get that breakout now. The failure, though, to reach that resistance the last time, if we can beat out that top, I think that would be very positive as well. And then I do have the Bitcoin one for a weekly, just to get a peek at that. I think nope, that's my daily. Let me move to the weekly. There we go. And I had to put it on a log scale. I prefer not to for price movement and measuring, but you can't really see what's going on beforehand if you don't have a log chart here. But you can see that move, that parabolic move, and then the drop to where your basing pattern would be. Well, basing pattern I would have looked at more down here in that 50 cent to $1.50 range, but now that does seem that we've formed some trading ranges here. And so once this parabolic breaks down, which I'm expecting, I would look for that move down to $6.
Okay. Well, we're going to wrap up here in just 1 minute. I do want to share one chart and just, one of the reasons why maybe I'm a little bit more bullish on gold right now than I've been. Again, it's just short term. This is a chart that I like to share here on Market Watchers Live quite often. But the top part of this chart is the U.S. Treasury yield minus Germany's Treasury yield. And the direction of the difference in our Treasury yields tends to go kind of in hand with the U.S. dollar index. So as our rates are moving up faster than foreign markets, particularly Germany, that normally is going to relate to a higher U.S. dollar. And that is confirmed by this correlation, which shows a lot of times going up to +1, which is hand-in-hand positive correlation. Only rarely do we get down to a -0.5. And you can see that's only been 3 times in the last 10 years. And we're almost there again. And you can see why. We've got the yields here in the U.S. dropping more rapidly than they are in Germany, mostly because they can't drop very, very fast in Germany. But the dollar has continued moving up. And so that has resulted in a negative or inverse correlation, which history tells us is going to be resolved. The question is, are our rates going to suddenly move back up, or is the dollar going to fall? I don't believe we're just going to continue to see this inverse correlation. So if that's the fact, or if that's the case, I think that you could make a really good argument for gold. Now, the one time I saw this before, where we had this big drop in the U.S. dollar back in 2017, gold really didn't outperform the S&P 500. But remember, that was a very bullish time for the market. We were going straight up, and I think that gold was competing against other assets that, quite frankly, were just a lot stronger. And so we didn't quite see that correlation. But for the most part, if we see the dollar take a move to the downside, that normally sets up well for gold on a relative basis to the S&P 500. Now, I don't know if that's going to impact anything or not, but I will say that at least makes me more nervous about the dollar, and therefore I think lends a little bit more credibility to gold's argument right now. So Dave, do you have any comments with that? Then Erin, and then we'll bring up the poll.
Absolutely. I was just, as you were talking, I think the bottom panel on your chart tells a really compelling story, which is the problem with gold is you haven't really been paid to own it relative to equities for so long, right? So even when gold has looked attractive, when it's bounced, you're still underperforming the S&P over that long term. If the thesis you just described plays out, gold all of a sudden, that line starts to turn higher, equities struggle a little bit, gold starts to outperform the S&P 500. I think that's where people will start to gravitate and recognize the fact that it is a place to be. It is a place to generate relative performance outside of a passive, equity investment. And then I think that's where you start to see a snowball effect of people starting to move assets over to gold. So that line starting to turn higher, based on what you said, I think that will start to feed on itself very quickly. That's a key one to watch.
I think too. And Erin, I want your comments too.
But the technicals on the dollar, Carl and I have been looking at a very long-term rising wedge. And of course, you're supposed to expect that breakdown. And that's what I'm seeing. I am seeing a decline in gold. I would expect that wedge to finally execute. That's going to mean, good things for gold because of their correlation. And clearly, you're starting to see that with that relative chart, with gold starting to outperform. I suspect if you looked at the dollar, it's pointing the exact opposite direction.
Yeah, and I think too, one other thing I think needs to be mentioned is that gold is a hedge. So when the stock market struggles, this is where investors tend to turn. And if you look back really over the last 8 years, when I see periods of outperformance in gold, you go back to late 2015, early 2016, the S&P 500 looked like it was breaking down. A lot of folks very bearish, and so money turned to gold. You look at the fourth quarter of 2018, we had that move up in gold relative to the S&P. That coincided with a very, very difficult period for equities. And just recently with this move up, we saw the same thing with the S&P 500 getting hit in May. So I think there's a combination of both fear and the inverse correlation with the dollar. I think all of that's kind of playing in here. But I agree with you, Erin. I think if the dollar were to break down, I would be much more interested, not only in gold, but on a relative basis, I'd be more interested in energy and materials. So, sure. Yeah, we're going to move on. Here's the poll. So we wanted to get what everybody else was thinking. But Dave, while we're looking at the poll, there was a question that came in about Bitcoin. And the question is, what is Bitcoin made of? And what is it backed by? Does it have a picture of the U.S. president on it?
Well, that's the thing. So it's basically a store of value and a way to exchange value, but it's very similar to a currency, right? But instead of having a physical, bill or something you put in your pocket, it's sort of like using a debit card. And that's sort of what Bitcoin represents. It's a virtual currency. It doesn't have a physical form. And it just represents the value that people feel that it provides. And the idea that the real differentiation is Bitcoin or other cryptocurrencies like Ethereum or something like that, Litecoin, versus blockchain, which is the technology that Bitcoin and others are built on. So blockchain is basically the secure way that a whole large network of computers can agree on what something is and agree on who owns something, and that's what Bitcoin and other cryptocurrencies are representing. So the short answer is no. There's nothing physical or anything that it really is represented by, and it really is a virtual currency. It's a virtual way of having value that can be exchanged. But it's funny, as we've used credit cards and as we've used online bank accounts, we're getting closer and closer to where that doesn't seem that crazy. But many years ago, it would seem ridiculous that could be a thing. But that's where it's at.
Right.
Yeah, I agree. Go ahead, Erin. What do you think as far as this poll goes? Are you surprised?
I'm kind of surprised that there aren't more the I trade gold. I would have expected more in that area. I'm not surprised to see trading both and Bitcoin itself being a really low percentage, but yeah, I would have expected that the gold one would have been a little bit higher.
Well, I'm wondering if maybe it's the wording, trading gold as opposed to investing in gold. I wonder if maybe if we had said invest in gold might be a little bit a different investment.
I know our poll critiques are out there, and I'm sure they'll let us know in the survey.
That's all right. That was a great poll. And by the way, we're going to go ahead and wrap this up. But Dave, Erin, I think you both did great. This was awesome. And for those of you wondering out there why my picture's not up on the screen, I was told that I have a face for radio.
Yeah, I
but
had to
a fine speaking
earlier. Had to get up a little earlier, made sure my hair was brushed this time, All
right. So what time did you get up, Erin?
Oh, what time? It took me, I only added 20 minutes.
Oh, okay.
That's all. I look great all the time, but
you look great. Dave, you look great too.
I appreciate that, Tom. Always good coming from you.
All right.
Yeah, let's go ahead and move on. That was fun, though. You all did a great job. Really enjoyed having you on the show there, Dave. Appreciate it. Cheers,
you guys. Take care.
Mm-hmm.
All right. Erin, of course, you did well as always.
Oh, well, you're just so kind. That was fun. I really enjoyed it. they're going to get you on camera soon. And I think I'm going to be on soon too, again.
Yeah, I think we have to get some security for the cameras first. We don't want to lose the cameras.
All right. Well, clearly I have no RRG for the 10 and 10. I'm going to frantically work in the background, but everybody vote so that at least I already know the second symbol because we already know the first, and I'll get the rest of them together real quick.
All right. Sounds good. So I am going to jump in here and take a look at Bank of America to start things off. So here is the chart for Bank of America, and I've got my relative charts up here. So you can see the bank index, the relative performance versus the banks, versus the S&P, and then, of course, banks relative to the S&P 500. Now, the big problem I have with Bank of America is not necessarily Bank of America. The big problem I have with banks is the fact that the interest rate environment is just not favorable for the banking environment or banking stocks in general. And I think that is perfectly shown here in this relative chart. Banks continue to downtrend relative to the S&P. So this is a group I'm not touching. Now, as far as the stock, it did manage to hold its recent support, that March low, maybe went just a tad beneath it, but I could draw this line. I could pull this all the way back down to this gap support, and you can see we held that. So I think the combination of the recent price support in March and this gap support, that's something I would pay particular attention to. And then on the move back up, anytime you're in a downtrend, and especially when we're looking at heavier volume on the selling, I pay attention to that declining 20-day moving average. You can see we've been contained below that now for the last month. So until Bank of America can get up above $28 and see some volume coming in and start to show some relative strength in banks, I'm probably going to stay on the sidelines.
All right. The most popular in the chat room is Walmart.
All right. Walmart. Well, it's breaking out. Can't argue with that. Its group is breaking out. So you look at the chart, really the only thing that's maybe lagging a bit is just Walmart amongst its peers. But otherwise, I think this is a stock that looks pretty good. So as far as annotations go, I would simply just be watching this breakout. I mean, I think that was a big deal yesterday. Volume started to pick up. Now we're confirming it with another push to the upside in a strong space. I like Walmart.
All right. How about First Solar, FSLR?
Yeah, First Solar, renewable energy has just been on a roll. And so any of the stocks related, I think, have somewhat of an advantage over the overall market. Renewable energy, last time I looked, I think it was up like 40 or 50% in 2019 year to date. And you can see First Solar, which began the year down around the $40 level, is up about 50%. So it is going along for the ride. Now here it's showing with versus the semiconductors, but I personally view it more in line with the renewable energy space. So I would simply say, as long as that gap support right there holds, I like First Solar. I think right now we're in a trading range. I'm going to call it 56 to 62. Look for a big volume breakout. Until then, I think we just consolidate in this range.
All right. Let's see. How about DFS, Discover Financial?
Yeah, DFS is in a really strong area of the market, and the stock is performing pretty well. Maybe not versus all of its peers, but clearly on an absolute basis, it's performing well. Now, the DJUSSF, its peers, is just now breaking out to a new high. You can see Discover is not, but I think part of that is because we had such a huge move. I think it's been consolidating. So I think we've got a really good stock in a good space. And what I was just talking about earlier with Bank of America, see how we were below this 20-day for a while? We have just moved back up above it. The 20 is above the 50. I think Discover is going to move higher because it is part of a good group. Again, not the best stock out there, but I think it is part of a very, very strong area of the market. So I suspect we're going to rise back up and test this 82 level.
All right. Next one up is Ollie's Bargain Outlet, OLLI.
Well, I can tell you they report after the bell today. So strap on your construction helmet and get ready for the earnings report, because this one could be anywhere. But it has been a pretty decent performer, a really good performer, actually, versus broadline retail. It went through a period where it struggled. You can see back in March relative to the group. The group was going higher. But keep in mind, look at what this stock did back at the beginning of the year. You got to give it a little bit of a leeway when it's been outperforming the group and then pulls back for a period of time. I think the key is, does it hold its relative lows? So, here we went up, set a low. We're still kind of in the trading range here. We could get a relative breakout with its earnings today. I think the way the stock has been trading, it's telling us that we're going to have a strong report. The only question I have is, do we gap up to a new high and begin moving higher, or do we fail and maybe need some further consolidation? I would watch to see where Ollie's opens after the earnings report this afternoon. If we can get a breakout above 102.50 and it sticks, I think it's probably another leg higher on the stock. I think this is a pretty good looking company relative to its peers and relative to the market overall.
All right. Sounds good. Another one that's been requested rather frequently, Trade Desk, TTD.
I love this. I have an aggressive portfolio that I revealed when I was over at Earnings Beats, probably about 2 weeks ago, 2.5, maybe 3 weeks ago. It was May 19th. But Trade Desk was one of the aggressive picks. And the reason I liked it was, number one, you can see the software group relative to the S&P was awesome. We had pulled back. TTD relative to the S&P, relative to software, had pulled back. But I believed that this thing was going to hold its massive gap support. So let me just draw this line here. I just felt like this, if you're talking about an aggressive portfolio, you want something that's in a good group, sitting on support, that if you're right, takes off. And this is exactly what Trade Desk has done. So I think this is a really solid stock within software, and I expect you're going to see continued outperformance here for a while.
All right. Next one up, Splunk, SPLK.
Yep. Love the ticker symbol, not so much the chart. And I think that with its earnings coming back down, closing below this 120 level, we had one little temporary bounce, but you can see the selling has continued to come in. And look at what's happened to its relative strength. This stock topped out all the way back in February. So as software kept going higher, what's wrong with Splunk? Could not get that breakout above that prior high with earnings. And I think the breakdown below 120 was significant. I think as far as the chart goes here, I would just simply look at one thing, and that is this relative strength, or weakness, I should say, versus the software group. If I'm going to own a software stock, I want one of the leaders. And I think with the big volume breakdown below that price support at 120, I think now there are many other software stocks that look better. I would pass on Splunk.
All right. The next one is the other Cisco, SYSCO. SYY is the symbol.
Yeah, it's in a good space. Consumer staples. It did come out with earnings, and this is why I don't like to hold stocks into earnings. Big move down, trying to hold on to that support, but I think the bigger support is actually the breakout level. We never went back really and tested this breakout. You see it right there? I mean, if you go back across here, that was a pretty big level, both support and resistance on many occasions. Once we went through, we came back down, got very close to it, but we didn't go through. So I think that right now the stock is actually in a trading range. So because it's bounced 5 days in a row and we still need to get through the 20, I don't think it's a trade here. But I think if it gets back closer to that 67.5, 68 area, I think that Cisco, the SYY Cisco, the food Cisco, would actually look pretty good on a reward to risk basis there.
All right. Let's see, the next one up is Lam Research, LRCX.
Okay, Lam Research. Well, you're in a bad group in the semis, but you have one of the better stocks. This one doesn't look nearly as good as, say, AMD, which has just been, hitting it out of the park relative to its peers. But you just have to understand that the group has been so weak. I mean, we're talking about a group that's got back close to a 52-week relative low. So sometimes you look at this, you say, well, this is just a bad stock. Well, it's not really a bad stock. It's just in a bad group. And that's usually enough to keep me out of it. And it probably would keep me out of it here. I think the biggest support level is going to be this pullback where we saw buyers come in back in March when we had the big sell-off in the market. So I would be okay longer term as long as it holds that 164 level. Short term, I'm not going to trade it, though, because right now it's giving me too many bearish characteristics. You can see these failures so far at the 20-day moving average, drifting lower, relative strength, not bad, but it's just in a bad group. So I think that if I was looking in this space, it would be AMD. Might be a couple of others, but I know AMD is one that I'd be focused on here.
All right. We talked a lot about the volatility of Bitcoin and, of course, cannabis stocks. So let's finish off with a cannabis stock, New Age Beverages, NBEV.
Yeah, this was the last one?
Yes.
Yeah. NBEV, when you look at the group, of course, they're in that soda soft drink space, which has been very strong. I'm not sure exactly where I would classify this one now with the whole cannabis thing, but it's still beverages that they offer. So I guess they're properly classified. I just don't like the breakdown. I mean, after sideways consolidating, you could maybe make an argument that after that huge run, for the most part, we were in this range, but now we've lost that support level. I think this is a stock that could go back down, maybe test some of those earlier lows that we saw in the fourth quarter of last year. So I'm not liking what I'm seeing here right now. It's an incredibly volatile stock. I could pull it up next week and it'd be $7, but it also could be $3. And so I just would prefer to avoid it. I think there's too much risk involved here.
All right. That does complete the 10 and 10. Here are the symbols that Tom just annotated. I'll have them up in the Market Watchers Live chart list. To get there, go to the Articles tab, click on the Market Watchers Live blog, and that chart list link is right there at the top. All right. Well, Tom was annotating a lot of those charts, and he talks about EMAs and simple moving averages as support and resistance. Here's Arthur Hill in our Talking Technically segment to talk more about EMAs and SMAs.
EMA or SMA? That's a question that I get often. Do you like an exponential moving average? Do you like a simple moving average? Well, it's kind of like salad dressing. Do you like ranch dressing or do you like Caesar dressing? There's really no right answer. It depends on your trading style. Personally, I prefer the exponential moving average. As you see on this chart here, that's because the exponential moving average weights prices more in the front. So the front months are going to be weighted more than the back months. So the green line here is an exponential moving average, and it is more sensitive to changes in price. So it turns up here. You can see we have a simple moving average, and it is smoother and less sensitive to price. And I don't use moving averages to mark support or resistance levels. I'm looking for the direction of the moving average. So if it's pointing up or moving higher, I think that is bullish, and that's the main thing to get from a moving average. Which direction is it moving?
Market direction is the single most important thing all investors need to know. Get the advice you need by joining dozens of elite money managers and financial experts, including Steve Forbes, Paul Merriman, Tom McClellan, and Keith Fitzgerald at the Money Show Seattle June 15th and 16th. You'll hear real-time market analysis and learn which stocks, bonds, funds, and commodities you should buy and sell to build a safer, more profitable portfolio. Claim your free pass at seattlemoneyshow.com.
All right, it is time for today's final market update. Let's see what's been going on in the markets. You know, it's looking pretty flat today, certainly not as exciting as we saw yesterday. The Dow is up over 71 points currently, and S&P 500 up just about 6 points, not quite there, a 0.21% gain. NASDAQ is lower right now, just barely, mostly unchanged. The New York Stock Exchange, we are seeing up about 24.5 points. Russell 2000, certainly not participating the way you would want to see. Notice these rallies on the Dow and on the S&P 500, and we're just not seeing that on the smaller caps. And, you know, hopefully when we start seeing the dollar declining, we might see a little bit of a perking up in the smaller caps, but right now not quite there. Canadian markets down slightly. The TSX is down 26.8 points. The Treasury yields are lower on the day. Again, 2.102% is the current reading. The VIX is moving lower. We're getting a little less concern out there as far as the sentiment goes, down about 16, down to 16, I'm sorry. UUP is also lower. Looks like it might have found an intraday low, down about 0.5%. GLD higher on the day by 92 cents, reading 126.39. USO down a little over 1/3% at 1073. And as you can see, TLT, big gap up after that decline we've seen over the past couple trading days, and now is heading back right there at that resistance area at the bottom of that previous gap. And real quick, what's going on with the sectors? Currently, energy is the winner. Staples, materials, healthcare, utilities. Can you say defensive sectors, Tom? Those seem to be in the lead. I'm going to go ahead and pass it back to you.
Yeah, that's kind of where I was going to with this update. I wanted to just show you a couple of things here real quick. First of all, the S&P 500. One of the things I want to do is, while we're in this downtrend, you know, you can see prices being held back trying to get through the 20-day moving average. The S&P yesterday closed like 0.5 point above its 20-day moving average, and it's trying to get up above it again today. But when you look at the NASDAQ, we haven't even gotten to the 20-day yet. So already you can kind of see that the money that's coming in to drive the market to the upside has been more folks not willing to take that additional risk, not just with the NASDAQ, but, you know, as Erin was mentioning, the sectors. I did a 1 week of the sector. So when you look back here at the S&P 500, you see this rally basically over the last 5 days. Now let's take a look at what's been leading it. Materials is up 6%, utilities 4%, consumer staples almost 3%, real estate 2.75%. Where are the aggressive groups? Well, here's one, financials. But look at communication services down 2.5%. Consumer discretionary is up fractionally, but it's 2 percentage points below consumer staples. The money is not rotating in the fashion that we want. Now, I'm not saying that, oh my gosh, that means we're in a bear market. But as Dave and I were talking about earlier, and of course, Erin and I talk about all the time, it makes you not feel so great about just looking at the S&P and the fact that it's higher. What we're seeing under the surface isn't really lining up that bullishly. So if this market starts to roll back over, I think you just need to be careful, because this is a little bit of a warning sign, I think, as we go forward. All right, we are going to move into our final segment, which is the Scooter Report. We always like to do the Scooter Report. For those of you that are new to stock charts, you are only going to find the Scooter ranks right here on StockCharts. It's an exclusive indicator developed by John Murphy. championed by many of us analysts here at StockCharts, particularly Greg Schnell. I know, Erin, you talk about it a lot here on the show. I use it as well many times when I'm trying to scroll down within a particular industry group where I get a list of stocks. One of the first things I do is click on the scooter rank, that column, to try to quickly zero in on the ones that are strong. But anyhow, we're going to do a quick, brief segment on scooters. And so what do you have for today? What kind of update do you have on scooters?
All right. Well, I thought the best way to do an update is to see, well, what are the scooter movers currently right now? And this is my regular homepage. I'll just show you. It's just the dashboard. And what I've chosen to do is have my three boxes here, the tiles represent the scooters for the large cap, mid cap, and small cap, and we'll look at which ones are currently leading. Now, one of the things I usually do, if anybody's watched this show, I rely heavily on my candle glance, but you can also use the RRG very quickly just to look at that top up, or if you want to do the top 10 right now, you can click there and get those and then do a candle glance. But I'm going to look at the scooter movers. I'm curious what those candle glance charts look like. So I'm going to start with the large caps. And here we go. Notice on these scooter movers, this is a fabulous place to go and look for possible trading opportunities, to be perfectly honest. I'm looking at this in my candle glance style, which of course includes for me the 20, 50, and 200-day EMAs, and then the all-important PMO. And so I look just right now, these are scooter movers, and you can see that the PMOs have already turned up in most cases, and there are opportunities possibly here. I'm looking right now at applied materials. It's catching my eye, so I will look at AMAT, double bottom. I mean, that's off of this decline. It sure looks like a textbook double bottom. That would be your confirmation area at $44 at your confirmation line. And the expectation, if this truly is a double bottom, and it does look like an Adam and Eve double bottom, no less. I'll let you figure out why they call them that. And if we get above that confirmation line, we should expect a move about the size of the pattern, and that's about $4 or $5 there. So you're looking at a move up to challenge the top that we had here back in August. So one of the scooter movers today that I find very interesting would be AMAT from the large caps. Another one that I am looking at right now would be, let's see, there was AMAT. This one looks very interesting as well, Broadcom, and I believe this was actually a request for 10 and 10, but I knew I'd be looking at it here. So we have the PMO, it is turning up. You can see that big move on the scooter to the upside. I like to look at stocks where we get a scooter in that hot zone above that 75 mark, because generally when it's sitting in that hot zone and its relative strength compared to its peers, it's sitting there, you tend to be in a bull market configuration for that stock. So, and that can persist for quite some time. So I like seeing this turn on the scooter. Look at the turn that's going on with the PMO. If you look in the thumbnail and drew a declining tops trend line, you can see a little breakout there on the OBV. The only area I'd be worried about right now would be that 280 area where we could have that resistance from the gap. But I would say if we start getting the momentum to continue here, if we can get a breakout above that 20-day EMA, I would look for that gap to be covered. All right, so I'm going to go back here. Now there's our mid caps. I'll look just real quickly at a few of those. Scooters, mid cap, candle glance. What do we have? Wow, some interesting looking stocks in the mid-cap area. I have to say, looking at this, let's see, is there just something that catches my eye? I have to say with Match, I like this formation going on here. And I'll show you what I mean with the annotation. We've got a breakout from a declining tops trend line here. And it looks like a pretty significant breakout. And I like that. The PMO is trying to turn up. It hasn't quite done that. So we could be on the early side of a move. Looks like we're pulling back toward that 20-day EMA and that declining tops trend line. After that, I would probably look for a move up to that $75 range. And look at the scooter. Again, it's been in a bull market configuration here since the end of November. Notice it didn't get hit that hard in December, like we saw a lot of the other stocks make new lows there. But we didn't do that with Match, and it's continued higher, and that's why you're seeing the scooter being as high as it is. So I'm going to go ahead. Let's see. We'll look real quickly at a candle glance of the scooters for small caps, and then I'll pass it back to you, Tom. All right, candle glance. Here we go. So these are small caps. So a lot of times you got to be careful. You know, for me, I don't like to trade really low dollar price stocks just because of that volatility. I don't have the stomach for it. When you get these big moves of 11% on a day and a decline that way, I'm not interested. But looking at what else is here, very interesting. I would have to say on the small caps, honestly, I'm not seeing anything overly interesting. Fannie Mae, you know, it's in the financial space, possibly setting up, let's see, an ascending triangle, or even you could look at it as a symmetrical triangle with a little bit of a breakout that's happened. I think you could also take this and maybe set it up. Ooh. Let me grab that and make this flat. Okay, I want this one out flat here on top, because you could almost make a case, like I said, I'm going to say for an ascending triangle here. And then I can just take this, and you can see right there the rising bottoms, and the expectation is a breakout to the upside. We've already traded and currently are trading above the top we saw back in January. So again, a $3 stock, you know, just be aware that you might get some whipsaw, and it might be a little bit more challenging as far as risk. All right, Tom, what do you have for Scooter Report?
All right. Well, the first thing I wanted to do is just kind of highlight two groups, and then I'll show you what I do to kind of find some of the stocks within those groups. So first, I wanted to show the defense group. I've been talking about defense quite a bit. And when you look at it, you say, well, it hasn't even broken out above the October high. So on a relative basis, it's not really been doing much. But that's not really the case. Your eyes can deceive you sometimes. We just know we went through a really rough May. Look at defense. Defense actually went up during the month of May and is breaking out to new highs here in June. So when you pull it up on a relative basis, what you see is that the long-term history of defense stocks is that they tend to outperform the S&P, but we went through a year where they didn't. And now they have moved back up. This is a relative performance chart where now they are back above both the 20 and the 50. They now have a positive relative PPO. And so this is the type of a stock, this is the type of an industry that I would want to be involved in. Now, before I go into the individual stocks, let me also bring up the personal product space. I mentioned earlier we were getting a breakout there. So you're getting a nice breakout here. And when you go into the relative chart and pull this up, you will see, again, off of a downtrend, now we are just breaking out. Look at this relative PPO. These are two groups that are beginning to get a lot of momentum in terms of relative performance. And so I'm going to pay particular attention to these types of areas of the market. So once you see that, what do you do with it? Well, I'm going to go in. It's really quick and easy using the scooters. If I go over here to the side and I go into the Scooter Report, well, I could do this a couple of different ways. I could do it this way, where I could just pull up defense stocks, just type it in, and there are your defense stocks in scooter order. And I'll show you the other way I do it, because I'll show you which stocks I picked. But if you're in the sector summary, you can scroll down through industrials, and I can pick defense, and I click on scooter at the top, and quickly I see which stocks. Now, this has all the large, small, and mid-size, so that's why I want to start here. But L3 Technologies, I own this one. KTOS is one that's in the aggressive portfolio that I put together. I don't own this one, but it's been a huge performer. Lockheed Martin I own. And then AJRD is one that I think looks pretty good too. So let me just pull these charts up, just a couple of them pretty quickly. L3, and if I go into the relative chart, you'll see exactly why I like it. So here's the defense group. Here is L3 relative to defense. Here is L3 relative to the S&P 500. And look at what defense is now doing. versus the S&P 500. So you got a hot spot, a hot group. You've got a very, very hot stock within that group. And as a result, you got a big winner. And as long as this continues to outperform and defense continues to outperform, it's going to be a really good stock. Let me pull up. We'll take a look at AJ. Actually, no, I want to show you that KTOS chart because that thing has just been on a roll to the upside. Look at the volume coming in to support this move to the upside as well. Just a massive move. Defense picking up, and look at the relative breakout on the stock. So that's that. Let's go over now and take a look at doing the same thing. Let's go through the sector summary. And in consumer staples, we've got personal products, which is leading today. It's been doing a lot of leading lately. We go into the scooters, and I wanted to mention a couple of them. Colgate-Palmolive, I have an income portfolio with 10 stocks that pay a nice dividend yield, but they're safer for the most part stocks. And Colgate-Palmolive is one of those that I listed in there. Stock's making a nice breakout. In addition to it being a really nice relative performer, and I'll pull up the relative chart here. So there's your breakout in the group. This stock is just kind of going along for the ride versus the overall group, but it's clearly outperforming the S&P 500 because it's part of a good group. But these types of stocks also pay a dividend. So in addition to this big move up in terms of capital appreciation, you also get the dividend. The other stocks I have, Procter & Gamble, Costco, and then NUS. I'm going to bring this one up just to show you. This is a low scooter score, and these are the kind you want to ignore. You get this gap up, and I talk about this quite a bit. The stock looks like it's starting to make some headway, but it's been a horrible performer. You want to make sure you keep your stop in play because otherwise, sometimes these stocks just simply roll right back over. Look at the selling. Look at the volume coming out on the selling. Couldn't hold the 20-day. Actually went all the way back down, tested the recent low. You want to be careful in stocks that underperform on a relative basis. But that's just another way of looking at the scooter report, finding groups that you like, and then simply going back in either through the sector summary or through that scooter report that I showed you, which is broken down by the different market cap companies. But pretty good, couple of different ways really to use the scooter rank on stock charts to help find some trade candidates. So there is your summary. So got a number of possibilities just by just quickly. I mean, you could see how fast Erin and I were able to go through and grab those stocks. All right, Erin. First of all, I want to say great show. I thought you and Dave did tremendous. Yeah, I mean, you did. It was fun. It was fun to kind of be a moderator and to go back and forth with both of you. And you both had so many interesting things to say on both Bitcoin and gold. So I just want to say thanks.
Oh, well, thank you. No, it was great having Dave on because like I said, I'm very unfamiliar with Bitcoin. I mean, I honestly, by choice, I knew it was a high risk sort of vehicle, so I never wanted to get involved in it. So I really enjoyed it. I got to learn from Dave, and it was sort of an interesting dimension to have the video going today too.
Yeah, and I really want to encourage you to fill out the survey response, especially today. It was the first time we've had our faces on. We did a little bit of a moderation, panel. Really like to know what everybody thought about it because we do want to try and help shape the show to what you want. And I enjoyed it. I think Dave enjoyed it. I know you did as well, Erin. So please, 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 today especially, complete that survey and let us know what you thought of the show. There is your upcoming schedule. I do want to thank everybody for being with us today. Please remember to complete that survey I was just talking about. It's located just below your video player. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody, and we will see you back here tomorrow. Happy trading.